Hi, this is P.R. Sundar, and today I am going to discuss about a new futures introduced in multi-commodity exchange, and that new index is called BULLDEX. BULLDEX is a short form for Bullion index. And before going to that, let us talk a little bit about the gold. I have come out with a video about few weeks before why the gold crashed. If you have not seen that video, you can see here. The gold normally behaves in the opposite direction of the stock market in a longer period of time. When the markets are in bull mode, the gold will be in a bear mode. When the markets are in bear mode, the gold will be in a bull mode. So generally, people advise that at least 10 to 20% of your portfolio, you should keep it in gold. So that if the stock market crashes, these gold prices will go up. In fact, in that video, I explained very well. 2008, Lehman Brothers collapse, the stock markets crashed all over the world, but the gold prices shot up more than 400% from 2008 to 2011. 2020, coronavirus, stock markets crashed all over the world, but the gold shot up almost double from the bottom. So it is always a good idea to have some gold in your portfolio. But buying the physical gold or buying the gold ETF, it is very expensive. Now there is a gold future. It's a bullion future. You can take long position here if you want. So with the minimal cost, you can have a gold and silver in your portfolio. Let me give some brief introduction about this. It's a futures contract. The lot size is 50 and it is monthly expiry. Every month it will expire, just like Nifty and Bank Nifty. And the weightage in the index is 70.52%. Weightage is for gold and 29.48% weightage is for silver. And current market price is approximately 16,000 and the contract value is approximately 8 lakh rupees and the margin money is approximately 6%. Of course, that can change a little bit here and there based on the value at risk margin. And the total margin to be paid is approximately 48,000 rupees. And the tick size is 1, which means you can bid and ask price has to change by 1 rupee minimum. And this is a good way of hedging your equity folio. If you are having a short positions in stock market, for about 10 to 20%, you can also have a short position in this index, Bullion index. If you are having a long position in stock market, 10 to 20%, you can have a long position here also. Last week, I came out with a video called pair trading. If you have not seen that video, you can see here. In that pair trading, I gave an example where you go long in one contract, short in another contract. The stronger one you go long, the weaker one you go short. That is one type of pair trading. And here, the gold and stock market will move in the opposite direction. They are inversely proportional. This is another type of pair trading. In that type of pair trading, you go long in one, short in one. But here in this type of pair trading, you go long in both. You are long in equity market, then you go long in bullion market also. You go short in equity market, you go short here also. So this is a new contract introduced by MCX, which just started trading from 24th of August, Monday. And this is a good instrument for hedging the portfolio. Thank you for watching.